Hello, welcome to the MIA by Law. What is MIA by Law? It is on professional ethics, conduct and practice of the Malaysian Institute of Accountants, fundamental principle and conceptual framework. Auditors shall comply with this principle, that is, Section 110, Integrity, Section 120, Objectivity, Section 130, Professional Competence and Due Care, Section 140, Confidentiality, Section 150, Professional Behavior. Those ethics are linked to Section 8, Approved Company Auditor. That is, the auditor must be good character and competent in perform duties. Let's see the first good character that auditor must have. That is Section 110, Integrity. All auditors should be straightforward, honest in all business relationships, and implies fair dealing and truthfulness. Next is Section 120, Objectivity. Objectivity consists of two, that is 120.1 and 120.2. Under 120.1, auditor is not carried away the judgment by emotions or any outside influence such as bias. Then under 120.2, auditor shall not perform service when there is a situation of biases. Section 130, Professional Competence and Due Care. Auditors shall maintain professional knowledge and skills to ensure the client and employee receive good services. Then, the auditor should act diligently in accordance with the applicable technical and professional standard when providing services. Professional competence consists of two phases. First is attainment, professional competence, and next is maintenance, professional competence. Under attainment professional competence, the auditor need to have professional qualification and need to comply with law. Next is maintenance professional competence. It requires the auditor to aware and understand of relevant technique. Section 140, Confidentiality. Auditor should not disclose any information to third party without proper and specific authority. Auditor need to continue keep the confidentiality even after the end of relationships between an auditor and client or employer. The last section is Section 150, Professional Behavior. An auditor need to comply with relevant laws and regulations. An auditor need to avoid any action that may discredit profession. An auditor should inform third party about all circumstances. The auditor is not allowed to make advertisement. As the conclusion, in order an auditor to practice all of the ethic, the auditor need attain the training. Then I will explain you about 100.8 threats and safeguards that can affect judgment of auditor. Threat consists of A. Self-interest threat. The auditor have direct financial interest to audit client. This linked to Section 9 Clause 1 Clause B and Section 9 Clause 1 Clause C. B. Self-review threat. This is the situation where the auditor involved in the financial statement preparation and judge their own report. In Section 9 Clause 1 Clause C. C. Familiarity threat. Auditor have long association with the audit client, such as the auditor provide the services for a long time or the client is the auditor's spouse. D. Intimidation threat. The things that can influence the auditor, such as an audit fee or spouse. Pressure in work in order to reduce the audit fees. This can cause the auditor to perform the audit poorly. E. Advocacy threat. Auditor is dealing or being promoter or having shares or other securities with the client company. This will affect the independence of the auditor when you are promoting the company to your client. 100.9. Safeguards are actions that may eliminate threats or reduce them. Safeguards created by profession, legislation, and regulations, such as MIA that under Section 290 Independence and Companies Act 1965 that under Section 9. What is in the Section 290 Independence? Auditor should be seen free of any interest which can conflict with his or her professional judgment. Therefore, the auditor should be independent in mind and appearance. Independence in mind is about the internal of features about auditor able to maintain an unbiased attitude throughout the audit. Then, independence in appearance is linked to Section 9 Clause 1 Clause C, where the auditor doesn't have any shares in the companies. Now is the method of practice. Member in public practice should not use a business name which to practice the professional. Not allowed to practice as a chartered accountant or licensed accountant other than in his or her own name. The auditor need to sign the agreement use the auditor's own name. Under 240, it consists of audit fees, commission, and referral. Let's see the audit fees first. Audit fees charged by members should be based on the value of work performed for the client, such as skills and knowledge, level of training and experience, time necessarily spent engaged on work. No member shall mislead his client or the public by charging an unrealistically low fee below 500 ringgit, which will result of low work performance. Next is commission. A member shall not pay a commission to obtain a client. A member shall not accept a commission from a client. This is avoid any unethical behavior by the auditor. Lastly is referral, the situation where a member refers another member to a firm. The member being referred to need to inform the referring member before accepting any other professional services. A professional accountant in public practice may receive a referral fee relating to a client. They may also pay a referral fee to obtain a client. Threat shall be evaluated and safeguards applied. International Standard on Auditing. International Standards on Auditing (ISA) are professional standards for the performance of financial audit or financial information. These standards are issued by International Federation of Accountants (IFAC) through the International Auditing and Assurance Standards Board (IAASB). List of standards: A. ISA 220 Quality Control for an Audit of Financial Statements. B. ISA 230 Audit Documentation. Malaysian Standards on Auditing. Malaysian Standards on Auditing (MASA) are produced and issued by the Malaysian Institute of Accountants (MIA). It is general guideline to help the auditors in fulfilling their skills of responsibilities in the audit.